Hey guys, it's Kim Crumpus with another video for Forex Traders. Today I want to talk about 17 things that if you stop doing these, even if you only stop working on about 5 of them, your trading will improve dramatically. So let's go ahead and get into those things. Number 1, stop overanalyzing. If you overanalyze charts, economic news, you spend hours on your weekends looking at daily charts and trying to analyze what's going to happen next, you're always going to set yourself up for failure. So stop doing that. Number 2, breaking promises. Stop breaking promises to yourself. I know there were times when I would revenge trade after making a promise to myself that I wouldn't do that. And it was starting to make me literally sick. And here's how I broke this cycle. I became very aware of what I was thinking and feeling in that split second before I would click the mouse and ask myself this: is this really what you want to do? Number 3, looking for shortcuts and hacks. How many traders do you know who are always chasing the dream? Maybe you're someone who is. I was. There was a time when I would jump from method to method, indicator to indicator, pattern to pattern, looking for my golden goose. I had shiny object syndrome. Maybe you've heard of it. I call it a sickness, and I had it really bad. I was never content. It wasn't until the pain of jumping around and not sticking with something consistently became so unbearable that I was able to stop myself. So I suggest go slowly, one day at a time, and stick with something for 1 year. All right, number 4, blowing up accounts after big wins, or even just blowing up accounts after trading with reckless abandon. You want to stop doing that, and the only way to do it is make a promise to yourself, the slide before where we said make promises but don't break them. So if you can start doing that, the better off you'll be. Number 5, listening to bitter complaining traders who never take responsibility. There's a whole group community on all forms of social media that just complain, and they never take responsibility for their own trading, nor do they stick with anything. Number 6, let's go ahead. Trading multiple time frames. Why would you want to trade multiple time frames unless you work for a big hedge fund or bank where you're trading long term? When you're a Forex day trader, you don't want to trade on multiple time frames, especially since the global financial crisis in 2008. The market conditions have changed dramatically. Number 7, using indicators, patterns, fibs, pivots, and trend lines, or anything else you can throw in there. These are some of the most confusing, I want to say, distractions, crutches that traders get sucked into. And the more you let yourself get sucked into them, the more off track you'll get, and you won't trade a method. You'll end up trading an indicator, tweaking it, looking for what fibs you should use on what time frames. And again, this all goes back to don't trade on multiple time frames. I mean, there's even 5 or 6 different kinds of trend lines you can use. It's a waste of your time as a Forex day trader. The sooner you get off them, the better you'll be. Number 8, trying to be an overnight trading wonder kid. There's no such thing as overnight success. I'm sure you've heard it a million times, but I don't know, very few people believe it for some reason. We all want to be a one-hit wonder and get out there and make gazillion dollars. It's just not going to happen. The sooner you accept that and you realize, yeah, you know what, I have to do a little work here, you'll become such a good trader. Number 9, looking at every pair or asset class to trade. You don't have to do that. We don't have to do that. Like I mentioned, we are not a big hedge fund or institutional trader. We're Forex day traders. We're typically at-home retail level traders, and we want to limit our focus. For instance, in our planning sessions in the morning, I look at 9 pairs. Kevin looks at 10. And the reason we do this is because it can be overwhelming and paralyzing to a lot of traders. I also found that over the years, over 10 to 12 years, you can make a lot of money just focusing on a small group of pairs. Number 10, using multiple methods and systems that you combine. So there's traders out there who will use different methods. They say, well, I like this part of this method and I like this part of this system, and I'm just going to make my own hybrid. Instead of focusing on, let's just use one method or one system, whatever it is, whatever resonates with you, stick with it for a year and see how it actually plays out, how you play it out. Really, that's more important. Number 11, focusing on the money. You have to get focused and zeroed in on your trading process, your method, your system. You can't focus on the money when you're just starting out. You have to focus on, hey, how good am I at executing my criteria? Oh, hey, do I really know the rules before I click the mouse? You have to focus on your trading process. That's the most important starting place. It's what builds a strong foundation for any trader. Number 12, worrying about a set or a string of losses. So many traders get hung up on this thought. Maybe you have. I know I used to in the past. I would trade one way, and then after 3 weeks of great trading, oh, guess what? There's losses. And I would get so frustrated and think, oh, this doesn't work anymore. And that's what I see a lot of traders do. They never work on something consistently to go through the ups and downs. If you think that life is just a bowl of cherries every day, you are really not in touch with what the reality of trading is or what the reality is in any parts of your life. There's always going to be issues we have to deal with. Number 13, blowing off keeping a trade journal. This is another big one. I used to think that, oh, well, I can just print out from my broker what my trades have been. And there's nothing like keeping a trade journal in the moment. One, it slows you down. Two, it gives you perspective. You can see when you're handwriting something out, what you're doing and why you're doing it. So slowing yourself down, giving yourself perspective, keeping track of your emotions before, during, and after a trade are really important, especially when you're first beginning. Or even if you're an experienced trader and you want to analyze what the heck was I thinking. A trade journal that's written out is great. In fact, it's been proven by neuroscience, not me, but by people a lot smarter than me, that handwriting gives someone an edge in anything they do. And so I actually created trade journals for Forex traders. They're out on Amazon. There'll be a link below this video. If you're interested, take a look. They're all under $7. They're a great deal. Number 14, believing a win rate is a measurement of your success. That is so far from the truth. A win rate of a method proves nothing. In fact, we just did a webinar on a win rate and what really is an important statistic. And a win rate is not the important statistic. Really, what's important is being able to cut your losses quickly and getting into trades and then pressing the big winners. All right, so a win rate, we talked about how the turtle traders, if you've heard of them, you probably have with Richard Dennis, and their win rate was 5%. Their loss rate was 95%. So they lost 95 out of 100 trades. But on those 5 trades or 5%, they made huge money. Now, I'm not saying you have to learn to trade like the turtles, but I'm just saying a win rate proves nothing. We also went into showing how an 85% win rate a trader can still take on losses. Number 15, using wide stops to let their trades breathe. Who's ever heard this before? I did. I heard it from a lot of supposed quote unquote gurus. Well, you know what? We're not doctors. We don't let anything need to breathe. There's magic in taking small losses. All right, number 16, believing your past success guarantees you'll be a great trader. So there's a lot of traders like myself. I'm a CPA. I came with an advanced degree, master's degree in economics and business, believing that, oh, I'm so smart, and because of that, I will just be a phenomenal trader. And that actually is a hindrance. It is nothing further from the truth. So if you're a professional or if you're someone who has advanced degrees, just be aware of the fact that you can never figure out the market, and your trading smarts ego has to be checked at the door. The minute I started doing that, checking my ego at the door before I sat down to trade, was the best decision I made. Number 17, the last thing, thinking you can get over FOMO. And FOMO, for those of you that may not know, is fear of missing out. And that is a very strong pull. It is a strong pull not only for traders, but in every aspect of our life. And so you can never get over FOMO. I still have FOMO. Everyone I know still experiences FOMO. The difference between the successful people and the unsuccessful is that we recognize it as it's happening and we're able to prevent ourselves from falling down the chute of FOMO and destroying anything in our lives, including a trade. All right, so I hope that helps you out. If you stop doing these things now, overanalyzing, breaking promises, looking for hacks or shortcuts, blowing up your accounts, listening to bitter, losing traders, trading multiple time frames, using indicators, patterns, fibs, pivots, or trendlines, thinking you're going to be an overnight wonder kid, looking at every currency pair or asset class, combining methods and systems, focusing on the money and not the process, worrying about losses, not keeping a trade journal, believing a win rate is important, using wide stops, believing your past success will guarantee your future, or thinking you can overcome FOMO. If you stop doing these 17 things, I can almost guarantee that you will become the trader you have dreamt about becoming. All right, that's it for this week. Look for our special coming out towards the end of the week, middle of the week. It is Thanksgiving week here in the U.S., and we are going to have our first ever Price Action Traders Institute Little Black Friday sale. All right, thanks everybody.